Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so in the subscriber webcast last night, we talked a little bit about today's Fed day. So I spent yesterday morning saying I don't really see anything on the horizon. So when I tell you guys that I don't pay attention to Barron's Market Watch, Twitter, basically anything that really doesn't have anything to do with price, I'm not full of shit. I don't care. So I get into the room yesterday. And they're like, dude, it's Fed day tomorrow. I'm like, okay, cool, because that's great. We will have a volatility event at 2 p.m., and that's awesome. So, because really, honestly, I've been saying this for over a decade. You worry about the 10 handles in front of you, and you will be fine. So, we recapped for the members yesterday kind of what we did yesterday. It was a pretty simple day. We were short in the morning. We were long in the afternoon. We're still long. We're pushing up into 4,500. So daily chart here, and they spent another day. The Bears had a good day though. The Bears had a very good day. It's better illustrated on the hourly. So look, never approach the 9-day, never approach the 20-day, never approach weekly pivot, any of that stuff. This chunk of price is the most important chunk of price today when we do get to 2 o'clock. Okay, if there's a ripper or a walk up before, where we close between 15 and 20 is going to dictate directional pricing Thursday, Friday. Bottom line. So we're consolidating. You see how tight the hourly bands are. They can't get back. They break it down. So it's a nice little short from 90, and then we come down to 62. They do a week. It's a week over week new low. It's a day over day new low. So the Bears are checking all the boxes. Lifts up a little bit towards the end of the day, back up to test the hourly mid-band, over the last, basically couple few hours. That's okay. That's okay. As long as we're below that green line, we continue to be sell rallies in the bigger picture. So that's the number one thing heading into today. You got to understand, we are sell rallies in the bigger picture. And depending on what the reaction is to 2 o'clock and the 2:30 press conference, until that 45.15 to 45.20 area gets converted to support, you have to be not blind short, don't be an idiot, but you have to understand that the chance of a rally petering out between here and there, or seeing a major brawl between 15 and 20 is pretty likely. If they do convert it to support, then 45 to 45.50 is just the beginning. Because if there's some dog whistle all clear today, you'll see them start to pile in, and we'll head back to the highs. Not the all-time highs, but the highs from last month. What will be interesting is the downside. If the Bears can execute a move down to 44.50 and beyond over the course of the next week, then as you look at this daily chart, that's a fall out of bed moment. That's engaging with the 100-day. That's engaging with the lower band. That's the kind of stuff that kind of spills out, and you can get a decent move. Now, before everybody gets all excited about the moon crashing into the earth, all I will say is they haven't pulled that thing off yet. And if you really think you're going to pull that thing off in a big way, with the Fed probably halting interest rate raises, that's a little counterintuitive. Market does counterintuitive stuff all the time. Maybe they'll do that too. But like I said, take care of the 10 handles in front of you. That's all that matters. And then 10 after that, and the 10 after that. Don't be looking for big 100, 200 handle setups when you have a coin flip moment at 2 p.m. on a Wednesday. Doing stuff like that is how people get stubborn long or stubborn short, and good luck with that. If you are fighting the trend over end of the week directional pricing because you're just too damn lazy to watch what price is actually doing, and you want somebody to hand you the next 100 or 200 handles. It doesn't work that way. So we'll have to see what the pre-FOMC price is, how it trades relative to that, what the reaction range is, whether we're making lower highs or higher lows, and whether we break out or break down. That's how we trade every Fed situation in the room. It's how we're going to trade this one, and it's the best way to get a toehold on risk so that you understand where you might be wrong and where you need to adjust. So instead of, adding to a loser, which we never ever do, you can adjust, get headed in the right direction, and benefit. It's not time to put your Bulls jersey or your Bears jersey on. It's not that day. Just react. All right, you got volume weighted average price 44.93, hourly mid 44.89 basically. Proprietary moving average is 96. We've talked ad nauseum about 45.15 to 45.20. That 44.52, that coincides with the daily lower band. That's the 100-day exponential moving average. So that's where we are. It's going to be fun. Let's see how it goes. All right. Fantastic day. Be safe, be healthy. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.